Good morning, everyone. Welcome Monday, March 20th. Hope everyone is doing well. And overall, pretty interesting stuff that happened on the reopen of the Sunday session here. And as we can see, naturally, banks are still in headlines as everyone's wondering why we haven't dumped necessarily more in this overall market, which did happen overnight, right? We got a pretty solid drop in the S&P and the futures in the overall market here pre-market. But you can see if you're taking a look at it, if you're looking at these futures, there has been a rebid, a pretty significant rebid from that 3,900 area. We've rebid, we even dropped below that, right? We dropped slightly below that into like these 96s, but we rebid really, really aggressively up like 70 handles right now. Prices are dropping a little bit. We'll talk about those levels in just a bit. Let's take a look at what's going on with the crisis move in the financial sector. There's been crisis takeovers, there's been bids for certain branches, for certain aspects. And what we know is regional regional banks last week suffered a pretty big beatdown, really, really dropping confidence, consumer confidence in that sector. So, hugely wild weekend, realistically, as regulators are trying to save this global financial crisis. And a massive emergency deal broke out with Swiss authorities. UBS agreed to scoop up a longtime rival Credit Suisse for $3.25 billion, which is less than half of Credit Suisse's market valuation. So Credit Suisse is down significantly here pre-market. So I don't lie to you. Let me just check what the price is of CS right now. CS trading, gapping lower, sitting at 89 cents right now. So the bid realistically prices in, I think, shares around like 55 cents or something. So um, without a deal, Credit Suisse would likely collapse this week, spreading further financial contagion that began in the U.S. with the implosion of Silver Capital. We had Silicon Valley Bank, we had Signature Bank, we had First Republic. It's facing troubles, but it's cutting ratings really quickly. So realistically, what is it for UBS? And by eating up and taking over Credit Suisse, the bank has an opportunity to scale up materiality and instantaneously bringing on significant additional AUM and AUS. So operational leverage and significant synergies that can be delivered would be exceptionally high, and UBS would likely only need to pay a token amount. So, which is what they're doing right now. And they become a massive monopoly and conglomerate in Switzerland, where there is a very, very large amount of money realistically. So, market sentiment also took a turn for the better following the emergency rescue, which would limit contagion through the financial system, only to drop lower as things were fully digested. With big losses on tap for shareholders and bondholders, the Fed, ECB, and other major central banks took coordinated actions to ensure that dollar liquidity, while the Swiss National Bank promised to access liquidity facilities for both banks involved in the transaction. The pre-market, UBS is down significantly, about 11%. Credit Suisse is down about 59%, respectively. And with regulator FINMA adding to about $17 billion worth of credit, Swiss's risky AT1 bonds will become worthless to guarantee that private investors help bear some of those costs. So, interestingly enough, we're going to see how that thing shapes up realistically in the States with all these regional banks following suit in this massive quote unquote financial crisis. So, I think a lot of those smaller banks in the States do get absorbed by large players. And that's what Janet Yellen was talking about recently, or I believe it was last week at some point when they had this huge discussion. She pretty much said that the smaller banks, like whatever happens realistically, they'll just kind of make depositors whole. But realistically, it seems like they do want to see larger banks just consume them, which is an opportunity in itself to look at larger banks. Also, Warren Buffett, right, reportedly been in contact with senior officials in the Biden administration in recent days regarding the regional banking crisis. Note that the Oracle of Omaha has been the savior of the banking sector in the past. And we saw that he invested $5 billion in Bank of America in 2011 as he tried to bolster the bank due to its losses tied to the subprime mortgages, and also came to the aid of Goldman Sachs in 2008. And naturally, right, when that money was plunged into BAC, it did rise up 25-30% in a week, which then gave back all of its gains and then some. So even if there is a lot of money injected on Warren's behalf into this, right, come save us, it's just a temporary hold in my opinion. Obviously, that does boost confidence in that bank and over in the overall system, but we'll see how that kind of shapes up. We also have this week the Fed, which is going to be the main piece of information that everyone's looking at. The Federal Reserve is set to hold its meeting right in terms of rate hikes, and typically scheduled. We do have rate hikes coming up. I just want to see the probability because there used to be a 50 basis point priced in pretty much. But now we have 70% chance of a 25 bip hike and a 30% chance of no hike whatsoever. Now, regardless of what happens, I think there's going to be a stern reaction in the market. If there's no hike whatsoever, that means that the Fed is still very cautious in making its next move based on what's going on with these banks. And it's going to be really, really tough for investors and consumer everyone to kind of gain confidence that the Fed has confidence in the system, right? Because if they're pulling back and not hiking at all based on what they've said recently that they do want to continue these hikes for the inflation measures, it really, really speaks volumes that they are super worried. So they hike 25 bips, right? If they hike 50 bips, so you're going to see this massive, massive dump in the market where inflation has been somewhat subdued. The PPI report came out, very, very good gain to the downside. But if the Fed continues this cut by just keeping rates as is or even cutting rates, we're going to enter a new cycle in quantitative easing realistically. And once that starts happening, then you're going to see one, a massive reversal in the market, but two, you're also going to see a potential next inflation cycle that comes around because things aren't necessarily done here as we came into this financial crisis situation. So one thing to consider as this week shapes up, we do have the Fed that comes out on Wednesday. We're going to be trading that live with our team. But also another thing to consider, levels and areas on the S&P today. Um, I wanted to see that low 50 hold, like 52, 53 hold out resistance to see if we can get price to push back lower from the distribution. But the distribution starts at that low 50 area, goes up to the 39.90. So prices are in that distribution right now. There's a pretty high chance that they do want to propel a little higher. I wouldn't mind seeing prices run to the upside slightly to get that last squeeze per se for the long side to come in, so we can get that stronger reversal. I think every long that comes in is a weak bid and a head fake, and I'd like it a little higher so we can actually slap this down properly. So that's what I'm looking at today. We're back above that low 50 area on the S&P. We're trying to trade sell side at that 64, 65 region, but I'd probably look to sell maybe like high 70s, maybe into the 90s if I'm a seller. But the way that this thing is holding, I want to see if they can actually hold the low 50s for the buy side to push it up into the top end of distribution. So that's all I have today. If you guys enjoyed that, come back for more tomorrow. We're going to talk more markets. We're going to see how this thing shapes up as the Fed comes around. And remember, community.tradeproacademy.com if you want to come into our free Discord. We also launched that new futures course that is based on volume profile and order flow. Trade the how you're supposed. These are we teach the concepts that you need to learn as a futures trader rather than focusing all your energy into like moving averages or all that garbage in terms of indicators. Learn the dumb, learn it from us, and you won't be disappointed. So I'll see you guys there, and I hope everyone has a great start to the day. Let's open up our trading rooms, and I'll see you guys in a bit, aka tomorrow. So thank you all, and chat soon.